Hey, what's up, everybody? It is Thursday, November 18th. I am back in New York City. I was in Switzerland for 4 days visiting my son. My son has a beautiful little chalet up in the mountains, and we went skiing one day in Zermatt. Unfortunately, on that day, it was really snowing. It was like a whiteout, so we didn't get to see the beautiful Matterhorn, although I have seen it before. But we had a great time anyway. But now I'm back. Folks, I just wanted to update you. A lot of people have a hard time with this, and it's something, I guess I just got to keep repeating it so you get it kind of really reinforced in your head. Fiscal flows. It's not about anything else. It's about this net transfer, this transfer of money from government spending into the economy. It drives everything. It certainly drives the financial markets. And we are seeing a very strong level of fiscal flows. I mean, right now, the 10-day average of daily flows is running at 30.4 billion. That's high. I mean, that's over 600 billion a month. Now, it's not as high as it was last March 2021 of this year, when it was almost $1 trillion in 1 month. And nevertheless, that is a high rate. That is 50% higher than the pre-pandemic rate. And again, I'll just remind you that these flows flow to corporate profits. Profits are going to be good. You're going to see the market continue to rise on that. And these corrections that we get in the market, they're basically going to be very shallow and very quick, and they'll occur like from some headline or some bad inflation print or something like that. Now, I still feel that the slowdown in the fiscal flows from March, when it was almost $1 trillion per month, down to the level where we are now at 600 billion, we've already seen how that slowed the rate of economic growth. And I continue to believe that we will see these inflation pressures start to moderate because, the whole supply chain issues, they're going to start to loosen up. I mean, I've been talking about this. I've been talking about freight rates coming down. I've been talking about China's exports going up. I've been talking about commercial and industrial loans going up sharply. I mean, in the last data that we saw from the Fed, commercial and industrial loans, which are primarily used to finance inventory, those rose by the most in 18 months in a single week. So the fact that companies are now, going to the bank, tapping credit to finance inventories means, it can be done. Whereas before, even if the credit was available to them, they're like, hey, doesn't make a difference. There's nothing we can get. There's nothing we need to finance right now because everything is locked down. Everything is, shelves are unstocked, whatever. Manufacturing has dropped way down. So, I mean, you got all this, I think, evidence that the main problem that we've been having right now that has been causing the higher prices, which are these supply chain issues, I think they're going to start to abate. I mean, these things to me, as a kind of an economic detective, so to speak, looking around for evidence, I mean, to me, that's pretty strong evidence. So we're in a sweet spot. And I don't think we're going to see the market come down very much, if at all. And when it does, that's a buying opportunity unless we see these flows start to decelerate from here. And we just got another stimulus basically on this infrastructure deal. All right, so that's what, 550 billion for telecommunications and broadband, 110 billion for roads and bridges. There was a bunch of other stuff in there. I mean, so I think it's just going to accelerate from here. And again, I want to make this statement. I know many of you probably won't agree with me because you see prices going up. Spending does not automatically and necessarily equate to inflation. In a capitalist economy, like everybody loves to talk about, a free market economy, more spending equates to higher production. It will induce higher production because that's the profit motive. Companies want to make more money. If they see more spending and more demand, the natural reaction to that is the profit motive, to produce more, as long as they can do that. The problem up until now was, again, the supply chain issues, the inability to respond to that higher demand, so that pushed the prices up. But now, as we get this loosening up of conditions, I think you're going to see rates come down, all right? I think you're going to see inflation come down. We've already had a pullback in oil, although I'm not sure how deep of a pullback we're going to get. I mean, I see now that producers, they're again long oil futures, and that's for them. That's kind of like a rare thing to see. They're almost naturally short because they lock in profits. Oil is their physical product. That's what they're long of, so they get short. So anyway. So that's it. I'm back in New York. I'm happy to be back in New York. I had a great time in Switzerland. Many of you may not know this, but I lived there for 10 years in Geneva, and I had been going to Switzerland for 10 years prior to that. So one thing I got to say is I was kind of shocked when I got to the airport in Geneva. I mean, literally nothing had changed. And I haven't been there in 20 years. Nothing. It was exactly the same way as I left it. There's very few places you could say that about. And I say that as a compliment to Switzerland because for me anyway, and my recollection and my reminiscences of it, I wouldn't want it to change. It was the same exact way. It was incredible. So really, it was a great time. We had a great time. And now I'm back in New York and everything's back on schedule. Remember, you still have the rest of this month to sign up to MMT Trader. It's the only service of its kind. I'm the only one who has an applied approach to MMT. I take the concepts and understandings of MMT and I use them to show people how to invest and profit in the financial markets. That's it for today, folks. Glad to be back. I hope everybody's doing well. Next week is Thanksgiving. I'm looking forward to that. In the meantime, have a good one. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial while you can now of MMT Trader. Bye-bye.